Hello, hi everyone. Welcome to FactorLab, and I'm Shekhar. We're meeting again after 1 year. So we did our last monthly review in the month of November 2024, and now in the month of November 2025, we're again catching up and doing the monthly review. The last 1 year, a lot has happened. I wanted to apprise you of what are the changes that have happened and why did we discontinue doing the monthly reviews. A major breaker that happened in the month of December of 2024 was SEBI regulation that if influencers cannot disclose or talk about live data and they can only talk about the market's data with a 3 month lag. So that firstly gave a break on me presenting about our market analysis. And secondly, also we cannot publish about the strategies that we were running in public. If you remember, we were doing our own DIY momentum strategy back in 2024. So that also we had to stop. That actually gave us a very good insight of should we continue doing this seriously or not. And we felt that this is our passion and this is what we love really to do. And we took a hard call of quitting our jobs, incorporating the company, FactorLab Capital Services Private Limited. And we felt that this firm should deal in the entire wealth management space and not just be restricted to either equities or mutual funds or PMS or AIF or new products like SIF. So we felt that we have to launch a full suite wealth management firm, and with that intention, we have taken up all the necessary licenses that were required, be it the SEBI corporate RA license, mutual fund distributionship license, PMS distribution, AIF distribution, SIF distribution. So once we have secured all the compliances, we didn't want to be on the wrong side of the authority. We have taken care of all the compliances, then focused on building our strategies, built our backtesting engine, double clicked on what strategies to work in different products, like what works in mutual fund, what works well in equity space, and what works well in PMSS. We did all that ground study, and now here we are in the month of November 2025. We have recently gone live, in fact, with our small case strategies also. I'll be sharing that link in the YouTube description. And I wanted to give you an update of what is happening in the overall market as of now in November 2025, and walk you through what we are seeing in the markets and is it a good time to invest or not a good time to invest. I'll be giving a much more detailed, granular deep dive than I was doing earlier, because I'm happy to announce that we are a SEBI registered research analyst. So I was always willing to say that whenever I open my YouTube channel that I usually used to say that we are not a SEBI registered advisors, but now we can confidently say that we are SEBI registered research analysts. Now let's dive into the monthly review. The first data point that I wanted to show was where are we in terms of the market. So there are three different trends usually in the markets that are observed. One, it could be an uptrend. Second, it could be a downtrend. And third, it could be a consolidated trend. What we are seeing right now is that after a 1 year long consolidation in the markets, we have now just broken out and seeing the early start of an uptrend. So that's a very good positive sign. And if you look at the pattern that I'm showing in my chart, you see that there's a clear cup and handle pattern. The first cup was formed between 2024 September till 2025 July, and then a small handle was formed later part of the year, and we recently saw a breakout happening in the month of November, and the breakout also got doubly confirmed by ensuring that this just hit the black colored line, which is the earlier resistance. It just took a support near that. Another interesting thing is that we've also seen the price action to be taking support at the 50-day moving average, so all indicating that we are seeing an early uptrend in the equity market. That's not it. We're also seeing something else in the market breadth. Now, what I mean by market breadth is we take the top 500 stocks of Nifty, that is Nifty 500, and see how many stocks are above 200-day moving average and how many of them are below 200-day moving average. And then we calculate that ratio of number of stocks above 200-day EMA divided by total number of stocks, which is 500. This market breadth gives you an indication of the quality of the rally. Right now we see around 50% of the stocks are above 200-day EMA and 50% are below 200-day EMA. So this is a mixed bag, but the key takeaway is that we are seeing the markets to be in uptrend. The breadth is not that supportive, but we see this is actually a good time that a sector rotation is happening. That's where you see clear divergence between the stocks which are moving, starting to go up, and stocks which are not really up there. So in here, in times like these, it is very important that we choose the right set of stocks and we position ourselves to those stocks which are clearly in an uptrend. And hence it is an active manager's paradise. Now let me show the third data point, which I really like. That is, you must have all been noticing that gold and silver had a phenomenal rally in the last 1 year. Now gold and equities are negatively correlated, so it also gives an indication where the markets are headed next. So to understand that, what I usually do is I plot the ratio of Nifty to gold. So the Nifty is on numerator and gold is on denominator. Now this ratio usually oscillates between like this. As you can see, the green line is when the Nifty becomes lucrative to invest. When the ratio line hits the red colored line or the channel, it means that it is lucrative to invest in gold and step away aside from equities. Now what we are noticing is that in the last 1 year, because of the steep rally in gold and Nifty being flat as it is, we saw a steep correction in the ratio chart, and the ratio chart is now looking very favorable. If you see, the equities are looking very good in the historical sense. Last, we have seen such levels during the COVID times. So again, now after 5 years past COVID, we are seeing a favorable position in the equities. I wouldn't say that this is the exact turning point where gold's rally would stop and equities would start to rally. I still see that even gold will also continue. I'll show the gold's chart as well to validate that point. Let me quickly share Gold Bees chart. Gold Bees is the ETF which mimics the gold. So as you can see, this is the Gold Bees chart. It has had a phenomenal run, as I mentioned. Now this is also going some kind of volatility contraction pattern that we notice, and it is also looking good in terms of the price action. The retracements are happening at 50-day EMA, and it is consolidating very tightly at the all-time high ranges. So I'm not that bearish on gold either. I see a further up move in gold, but having said that, Nifty has more legs to move. So that's the data point with respect to Nifty versus gold ratio. The one data point which I'm not bullish on or gung-ho is about the valuations. Now, a better metric to calculate valuations is by looking PE, but there's an even better way to look at the valuations, that is CAPE ratio, which is nothing but cyclically adjusted PE ratio. PE ratio usually takes the last 1 year of earnings and returns and then calculates what is the multiple. Whereas CAPE ratio takes the last 10 years earnings, adjusts itself to inflation and then calculates the PE. So this way, we are better off in terms of understanding, in terms of the valuations using CAPE ratio. Now, I've plotted the CAPE ratio since 2000 with respect to BSE Sensex, and for Nifty 500, I have data from 2005 onwards. Now, what you see is that the CAPE ratios are a bit elevated. These are more than 1 sigma deviation from the baseline or the mean line with respect to the valuations. And while having said that, the CAPE ratios also are near closer to the 5-year moving average. In a way, we have some comfort that the valuations are not that expensive as seen a couple of years back. But having said that, we are still elevated in terms of valuations. And it can also be a reason that usually the growth economies like India do have a higher valuations as compared to the developed economies. So that is a new normal as well. Now let's take a look at the factors and their performances. When I say factors, we usually take into consideration the top 5 factors, which is momentum, value, quality, low vol, and alpha. Now within the factors, we have done a very deep dive of which specific factor index to choose, which will be a good representation of that factor. So I don't want to delve too much into the detail. I'll be posting the link for that factors video that we did. But broadly saying, the factors that I choose for momentum is Nifty 200 momentum 30. For value, I usually check Nifty 50 value 20. And for low vol, I check Nifty 100 low vol 30. For quality, I check Nifty 200 quality 30. And for alpha, I check Nifty 100 alpha 30. These are the go-to indices that I usually check to know how the factors are moving. Now, one good thing about factors is that of late, all the factors are in green. Whether you look at the last 1 month's performance or last 6 months performance, all the factors have been doing well. We see green shoots emerging in the factors. That's a good indication, especially for someone running a quantitative strategy. Good factors is an indicator that a quantitative strategies going forward will do well. Now, I wanted to show how the sectors are doing within the broad market of Nifty 500. So for that, let me show you a detailed breakdown of different sectors that I usually track. Let me zoom in a bit so that you can see them clearly. So I track these 20 sectors. I track their last 1 year, 6 months and 1 month performance to see how are they shaping up. 3 things have caught really to my eyes. One, media has been pathetic the last 1 year, in the 6 months, in the 1 year also. In fact, even if you remove the last 1 year, even if you take historical also, media has been the worst performer. So let's ignore that. The one sector that caught my attention is the PSU banks. The PSU banks have had a phenomenal rally. You take the last 1 year or 6 months or 1 month, the rally has been fantastic. In fact, in the last 1 month also, they have risen by 25%. So this caught my attention and I quickly checked the charts of how are they doing it. What I really like about the PSU bank chart is that it has broken the decadal highs. So if you see Nifty PSU bank, it had a all-time high somewhere back in 2010, and since then it was languishing in that range for almost 14 years. It broke away from its previous high of 2010 in 2024, and after breaking that high, it had a brief rally in 2024, and then it again started to correct with the overall broad market correction as seen in the 2024 and 2025. And it did correct, but it took support at its previous resistance. That gave me even more confidence. Having looked at this chart, it broke out and also did its retracement, retested its previous all-time highs, and then again started to rally. Now we are seeing a double breakout or the late stage breakout from the Nifty PSU bank on a weekly chart. So that's one sector we are pretty bullish on. Now let's go back and see what other sectors are doing well. The other sector that also faring well is the metal sector. Metals also is doing well, not as great as what we see in PSU banks, but definitely it's right up there just after the PSU banks. 15% in the last 1 year, 13% in the last 6 months and 10% in the last 1 month. Now this is about the sectors and the factors. Now I'll show you the broad level markets, not just Indian equities, but also what the global equities like Hang Seng in China and Nasdaq in US and gold and silver are faring. Silver and gold had a phenomenal year. So they have clocked in around 80% and 60% silver and gold respectively in the last 1 year. Right now they are taking a small breather. I just showed the gold chart, right? It is undergoing a volatility contraction pattern. But whereas in case of silver, I'll use silver Bs as a proxy. Silver is also undergoing this volatility contraction pattern. It has retraced well back to its 50-day moving average and again consolidating. So we need to see how long will it take to consolidate and move to the next leg. So we need to see how long will it take for silver to consolidate at these levels. But Nifty is looking really well in terms of the price action, and gold and silver are taking a breather like I just mentioned. Now with respect to the other markets, the Hang Seng Bs and Nasdaq, let me show their chart and give my commentary. Let's take a look at Nasdaq. So the Nasdaq had a great run in the month of in the year 2024 to 2025. But of late we've seen a correction, and again we see a small bounce back from its earlier levels. So far, nothing much to decipher from these levels, because this is just the first leg of retracement, and usually we can't, or personally I don't take a call in the first retracement. I'll at least wait for a couple of retracements or a couple of more higher lows or lower lows to form before making a judgment, or at least trying to come to some conclusion of where the markets are headed. Right now, all I can say with respect to Nasdaq is that it is correcting. Whether it is a downfall or consolidation needs to be seen. Let's take a look at Hang Seng. So the one index that I usually track with respect to Hang Seng is the Hang Seng Bs. Now the Hang Seng is also consolidating off late. Recently at its recent 52-week high, but if you take a larger picture of last 10-15 years, Hang Seng has been mostly range bound. That's what I can say. And it doesn't give that confidence to deploy money in Hang Seng, or at least in the Chinese markets, unless you're an active picker. Whereas the Nifty markets are, again, going back to Nifty, are at an all-time high and raring to go up. That's the read that I can see in terms of the Nifty. Let me actually show you the charts of the factors also, so you can get a sense of what the factors are doing. So I'll show the Nifty 200 Momentum 30 index. So you can see the Nifty 200 Momentum 30 index. It has a phenomenal run from 2023 to 2025. Then correction happened. Now it is undergoing a volatility contraction pattern. So its previous support had turned into resistance, and now we are almost inching closer to break this resistance. This is the momentum index. Let's take a look at the quality chart. Same is the case with quality. Quality also, we notice that it is undergoing a VCP, and its earlier resistance earlier support has now turned into resistance. We're just closing it to break that from that levels. Let's see low wall. Low wall, in fact, is positioned much better because it's relatively much closer to its all-time highs and has already given a breakout. And if you can see actually the chart, we are almost closer to its previous highs. We're just 2.5% from its 52-week high. So the low wall has performed relatively better compared to quality and momentum. Let's check value as well. Nifty 50 value 20 index. So this also is following a similar pattern of what we saw with momentum, quality and value. Its previous support has turned into resistance. We're just closer to the resistance. One more thing that I wanted to highlight is that please bear in mind that the December month is going to be the month of rebalance for these factors. So a lot of churn will going to happen in these factors, because these factors are carrying the stocks which were picked up maybe sometime back in July or June. So the impetus to these factors will come in the month of December. As the churn happens, the next leg of stocks based on their momentum or quality or value, whatever factor, would be picked up, and December would be an interesting month to watch out how these factors would pan out and see the next leg of rally. What I can at least envisage sitting as on end of November is that this looks like a good pattern, good shaping up that is happening. The volatility is getting contracted, and we would see a breakout soon. That's the read that I can have. And let's take a look at the last factor, which is Nifty Alpha. The Nifty Alpha 30 is in fact closer to its all-time highs, just like a low wall. So this is broadly the take with respect to the factors. That's it, guys, about the monthly review. It feels so great to be doing these videos, especially in our new office. This is all because of your support and your love that we have made so far. Please do continue to watch our channel, and we'll be adding a lot of value in terms of new research that we bring in, new products that we bring in, and new investment strategies that we bring forth. One more thing that I want to mention is that please attend our AMA session on Sunday, where we'll be talking in detail about our small cases. So I want to give you some more information about how does this work. So earlier, the RAs or RIAs, whosoever had some model portfolios or strategies running in, they were used to publicly present their performance, saying this is this much returns we have given, or this is the performance over the last 1 or 3 years. But now SEBI has mandated that all the past performance cannot be published publicly. It has to be taken with the approval of a new body called as PARVA, and only after that that can be published. So, and hence I'd be refraining about sharing our backtested results or strategies about our small cases. In fact, I'd be doing that in private in our AMA session. So for that reason, please register with the link that I'm going to provide in the YouTube description. I'd be happy to discuss about our strategies, about small cases. Yeah, looking forward to meeting you again in the next week. Thanks a lot. Have a nice day, guys. Bye.